The broadcast is now starting. All attendees are in listen-only mode.
All right. Good morning, traders. First question. I'm on a headset and I'm gonna unplug it for 1 second. I'm on the road and I'm on a headset, so I want you to tell me how the audio sounds. Are we okay? We sound great? Awesome. Okay, sweet. I got everything up and going. So good morning to you, Fred. Good morning, John. Good morning, Ted. Coffee indeed. I need another cup. Good morning, Mikhail. Good morning, Faust. Good morning to you, Chet. Desi, love it. Welcome out from Ireland. Good to see you. Good morning, Fred. Good morning, Phil. How are you, Raymond? Thank you, Teresa. Love it. Oh my God, you guys are like, it sounds like I'm on a headset there. It says, right? Yes. Okay. Carmen says, watch the driving. Okay. I'm on location in sunny, muggy Orlando. Oh, it's so muggy out here. I don't know how people live out here. It's crazy. The girls won their first game. They are in the U.S. Youth Soccer National Championship. Very exciting. Won their first group game. The second game is this afternoon. Ooh, could be exciting. Anyways, welcome out to the Tradespoon live trading room opening bell. I convinced Vlad to switch with me because during the afternoon I will be at a soccer game. Very excited to be here. I love your guys' enthusiasm. God, I miss hanging out with you guys more. If I missed anybody saying hello, I apologize because it was a slew of good energy. How many potential games? We have 3 group games, and you got to win all 3 because only one team advances from each group. So semifinals on Saturday, finals on Sunday. So hopefully next week when we meet, I'll have good news. But I'm working off my laptop, so I have less real estate than I'm used to. It's a little clunky, but I feel like I have a pretty good rhythm today. It's good to see everybody. My name is Scott Beck. For those of you who don't know me, I'm the head trading coach here at Tradespoon. If you don't know me, please take a minute to say hello, introduce yourself, and start participating because it makes me much more comfortable when I feel like we're interacting rather than talking at you. I want to talk with you. Okay, let me give you a little information. I've been trading for over 20 years. I've been teaching for over 16. That's me. These are the disclosures. What do we know? We know we need to be careful out there, manage our risk, and protect ourselves at all times. Done with that. Let's get through. Let's talk about it. Right? Let's talk about it. What's going on? I have been saying I see things starting, little buds of green in the spring popping up like, oh, okay, right? Remember we talked about Apple has been showing some strength that is absolutely necessary for technology to participate in the rally. And if we're going to have a sustained rally, technology has to participate. Apple is such a great representation of things. And so when we see Apple starting to show some signs of life, that gives us hope that other things are starting to show signs of life, that we're finding a bottom and getting ready to go. What corporate America is really saying about the economy? Saying it's okay, right? I mean, we've had a few doom and gloom things, but about what? There's a very good chance that we're through the worst of it already. Stock futures struggle to build on Tuesday's rally. That is true. We were positive overnight. I couldn't sleep last night. My room is like close to a freeway and it's so loud I can't sleep. It's crazy. But yeah, the futures were up overnight. You can see we've kind of come down, but we're still very close to opening it at where we closed. S&P's down 0.09, Dow 0.11, NASDAQ flat, Russell 0.16. Oil's back down 2%. There's been some concern about if oil is going to pick back up again. Gold and silver are pretty flat. So yeah, we know we're going to continue to see the earnings announcements coming out. And when we talk about what corporate America is really saying, this article, I popped into it for just a minute, and it was talking about hiring plans are shifting. Goldman Sachs is reinitiating performance reviews. Tesla's laying off 10% of their salaried, whatever. But what it's saying is that, they're realizing you got to tighten the belt and run a little more efficiently again. They got complacent. That's what it tells me. They got complacent. There's a very interesting book called Memos from the Chairman. And it's funny because I bought it by mistake. Like the chairman was Alan Greenberg. And for whatever reason, I thought Alan Greenspan at the time, and I thought Fed chairman. But no, Alan Greenberg was the chairman of Bear Stearns back when Bear Stearns existed and was actually extremely successful. Very funny, but it's basically his philosophy was, when times are good, run tight, run lean, right? And when times are bad, run leaner. So always be efficient. And I think, that was my takeaway. And I think maybe companies are starting to realize that they got a little bit loose. Some of their little pet projects are going to get shut down, things like that. But overall, the earnings are coming back okay. We've got the Fed next week. There's still some who think 1%. I think it's going to be 0.75, and that there's a small chance that there's a surprise half a point, and where the Fed says, you know what, we think that, looking around inflation, even though the CPI, the CPI is such a terrible representation, in my opinion. Because when you look around at the commodities and the futures, prices have come down on so many things everywhere. It just hasn't quite reached the consumer yet. But because the consumer is still spending money and still has confidence, and spending is still fairly robust, I think the Fed's like, okay, let's ease up a little bit and see what happens. That's my projection. We'll see what happens if I'm right. So. John says it's still a shit show out there, right? I mean, it a little bit is. Good morning, Bob. Good to see you. We as I say, things are picking up a little bit. Let's just pop over to a chart for 1 second. What is this? SPY. Let me get to the 6-month data. Okay, so yesterday's rally. The hard part of yesterday's rally is that it just it's really kind of testing. I don't think we broke this level. Some people are like, oh, it's a breakout. We need today to confirm that, right? I'd like to see for me to really think the buyers are regaining control. I want to see us move into this gap area here, right? And this is the gap I'm talking about right here, where, back in this area, if you remember, if you were meeting with us back then, we had, oh, what a terrible line that was. Sorry, I'm on a pad. I'm on a mouse pad. I forgot the mouse. We said, look at that. There's our break. All we need now is a higher low, and things can turn and start going the other way. But right at that critical junctures where things really got nasty again on increased volume. So we're like, woo, all bets are off. Relax. So we were glad we didn't rush into anything bullishly in that situation. And then we reached this bottom here. A little bit of an island reversal, right? Not an abandoned baby because there's 2 candles, but definitely possibly an exhaustion gap to the downside. And then we find ourselves here off of the lows, but in this kind of a sideways pattern. And now we're evaluating to see, is that breaking out? I'm not convinced yet, but if we can move a little higher and get somewhere near 400, that really would show us something a little bit better, right? That would give us a little bit more information that the buyers are in fact. Now, have I been trading bullishly? Yeah. Why? The VIX. The VIX. The VIX has given me extra confidence. We'll talk about that here in just a minute. You guys know I love looking at the VIX to get information and insight into institutional sentiment, which is very hard to come by most of the time. There's our opening bell. So we're actually opening flat. We're going to see, do we continue this move a little bit? And then what I'm going to be looking for is some kind of a retracement, and I want that higher low. Higher low, let's go. That's where I think now we have the ability to try to make a run up. That's a terrible line, I know. Up into this area up here around 410 to 415. Yeah, that's my thought process there. Okay, sorry, I gotta continually open my question panel because I'm only on one screen right now. What does Dear Stella think? Yep, gonna do it. I did not run my numbers, John, but they've gotten a little better the last time. I've moved from the -5s into like -3.5, -3. It's shown some prospects of improvement. I'm certainly not positive yet, but I have seen improvement. That's what I would say about my market posture for anyone who conducts that weekly market posture routine. Okay, let me keep going. News. Tesla is reporting earnings soon. Did great. Did anyone finish that? We did a Tesla trade not long ago, and it worked out like phenomenally well. Did anyone finish that trade? It expired and hit expiration and finished in the money on the spread that we did, and I booked like 95% of the profit on that. Worked out great. Why the market hasn't fully priced in a recession? I think that's someone's opinion. Of course we possibly have. Of course we have. Goldman Sachs economist says we'll see a sharp slowdown in monthly what? I want to see what that is. Monthly hiring. Okay. A slowdown in hiring is actually okay. This is the strongest labor market we've seen, maybe ever. If we're not losing jobs, but they're just slowing down, gaining jobs, I mean, look, we're fully committed, right? We've got still 11 million job openings as of the last report, but not that many. I believe we only have, what are we, 3.5% out of 150, what's our workforce, 170 million? So 1%, 1.7 million, so 3.4, 5.1. So we got about 6 million people that are technically unemployed, and 11 million jobs. For a while there, I thought they said we were at 3-to-1. That seems closer to 2-to-1 for every job. But a slowdown in monthly hiring is okay as long as we don't start to see job losses and go into the negative. Okay, that's let's see if there's any other news that we think is important. Congress deliberates on a $52 billion semiconductor bill. Did you guys hear? The media made a huge deal about, Nancy Pelosi's husband was buying a bunch of it. I looked into it. There's nothing there, right? He had options that were like $100. So he bought deep in the money options at some point. They were expiring. So he's either going to sell the options or exercise them, and he's exercising them. That's not really a story where it's like, Congress is looking at this and he's buying it. That's not what happened at all. Not even close. He had options from whenever. It could have been a year's worth of options, could have been months worth of options, but he had the options prior to the Congress talking about a semiconductor bill. So yeah, okay. Don't get too swept up into the hype I mean, certainly I do think that I certainly think there is insider trading and Congress should be investigated. See, there it is right there. He just bought over $1 million of this chip stock right before a vote. That's not what happened. He didn't. He exercised options. He had already had that in place. So yeah, I absolutely think that Congress should not be able to, or should have greater transparency, but there's nothing there now. That's about it. We're gonna keep watching the earnings announcements, and then, as we said, we're getting closer to next week's report. So this week, not much else. Jobless claims, manufacturing on Friday. Then next week we get consumer confidence on Tuesday. And then we get some durable goods, but the main announcement obviously is Wednesday's Fed announcement. That's going to be big. GDP on Thursday, and then on Friday, some inflationary data, some income, some spending, some more consumer sentiment. So quite a bit of information as we get more into earnings season and in the right into the middle of it. Next week, we'll get the Fed, we'll get some inflation, and we'll really get a sense. Does this sideways action hold or break up? If something crazy happens next week and we break back down, well, then all bets are off and we're back in the quagmire that we've been in. That's the way that I see it. Why do I think he bought all those options ahead of the vote? Those options could have been a year old. They were deep. They were $100 strike price, I believe. $100 strike price. Where is Nvidia? About 250? Let me think. I can't remember here. So, it's 170. So he had $100 strike price. I mean, it's crazy that he would. I don't think I would want to follow him doing anything, buying deep in the money options like that. Anyways, okay, let's keep going. Let's take a quick gander at the 5-minute to see how today is shaping up, the opening range. So you can see we opened, we sold off, we came back, we rallied, we pulled back. Ooh, that's a wide range already. So the bulls and bears are tugging back and forth. Should be an interesting day to see if we can actually gain. If we can gain a little ground, then I think the buyers are showing a little extra something, and I would feel pretty good about seeing that. Okay, let's go check the model. Now that I'm done with these, I'm going to get rid of them because everything is slowing me down here. Get rid of that. Get rid of that. Let's go to that. Okay, how does Stella see it? The model see it? So Stella says we may be running out of steam soon. Maybe even today we test a high. I would like to see if we can get even a little higher than on the next pullback. If it's a higher low, you can see she's kind of thinking the same. Like we may be running out of steam soon, looking for a pullback. If we get a higher low, then we're looking for possibly that next kick up. Summers are sideways for the most part anyways. That's what we tend to see. That's what we tend to expect. But overall, I would say Stella still sees it as neutral to slightly bullish, which is what we're saying. If you got some bullish trades on, be thinking about tightening stops, taking profits. Are you getting close to targets? Things along those lines. He has bigger worries with his DUI. Good. Send him to jail. Got no time or tolerance for that. That's for damn sure. Okay. Let's look at the others. Let's look at the Qs. Okay, on the QQQ, very similar. Maybe hitting some resistance, then seeing a pullback, and then moving sideways into the a sideways channel, very similar to what we saw on the SPY. Let's look at the IWM. I would love to be trading more as we move into the fall and into the winter month, the end of the second half of the year. I'm ready to trade more. I'm ready to get through this. The average bear market's approximately 9 months, and we're now about 8 months, 7-8 months into this bear market, right? When you think about where we topped out, I believe it was December that we hit our high, and then we started to kind of lose strength at that point. So I would say we're 7-8 months into this, right? So I think we're getting close to being able to process it. Certainly, it would be nice if the situation with Russia and Ukraine, I don't even know what's going on. It's like we've just kind of adapted to it, and now it's just like, we don't really hear much about it. At least I don't. Maybe that's just me. I don't know if there's any end in sight, if there's, if it looks like it's going to be Russian occupation, but it does seem like the commodity prices are significantly less impacted than they were when it first got started. We're still talking about the possibility of a COVID winter, a resurgence. They're trying to get vaccines that attack the new strains, but it seems like we've adapted to that as well. China still shuts down sometimes, but they're about the only ones. So it feels like we're kind of in a situation now where we can start building back up out of this. And I believe that the price action is reflecting that. I'll take a look at JPM. As soon as we jump in, Desi, I'll remind me as I get into our watch list. And let's look at the Dow, and then we'll go look at the VIX, and then we'll get cracking here. The Dow, very similar. Hitting some resistance, looking for a pullback, and then looking for a surge coming up out of that. Okay. Here is the correlation has got out of negative. We're at 0. We're at 0. What do we tend to see in July, August, September? We tend to see sideways. So what's developing now is actually quite normal. Now, normally we have bullishness here instead of bearishness here, and that's why there hasn't been much of a correlation score to speak of. But if we now start moving into this sideways, there's still hope for that bullish, right? Give us some bullishness in the second half of the year. That would be fantastic. We would love it. Heat map, I don't think is actually running yet. We'll come back to this. All right. Let's go look at the VIX. And I'll give you my assessment there. So the VIX, we got through 25, and now we're kind of stuck at 24. This is that last level right here. I'd like to see us get through there, but I don't know that we're going to do it now. When I got this lower high, so we had this high back here, and then we had this lower high here, and that was a little bit of a chance, and then we had this lower high here. So what do we have going on? We have de-escalation. We have institutions who are acquiring less hedges and starting to unload the hedges that they already have. That's the easiest, most effective way to look at what the VIX means, why we consider it sentiment and fear, and what it means when we see it starting to dissipate the way that it is. However, we're still, we've been here before. This is exactly the point when I showed you that where we were thinking, are we going to get a higher low? And then everything fell apart. That was right there. That's exactly where we are right now. So we're not looking to rush. We're looking for confirmation. What's it going to look like? So instead of shooting higher, it would stop and come back down. So what would I be looking for here? I come up and I come down and I get another subsequent lower high. And then I think maybe we have what we need to break on down and start getting back to the low 20s and maybe even back to the teens. We touched the teens in April for like a half a second. But we've basically been living our lives between 24 and 36 on the VIX for pretty much most of 2022. So certainly we would like to see, because when the institutions are convinced that we're through it, then the market will reflect that. They have this is so what are the positives of this market? Labor, the job market, consumers, they're spending money still. And the fact that institutions have a lot of powder in their kegs. They're ready. They're sitting on piles of cash, more cash than they've been sitting on since 2009. So with that being the situation, when they're convinced, this thing, why it's so important is when you look at recovering out of a market like this, is we're likely to see a big pop, pullback, big pop, pullback, and then we start to just kind of work into the next trend, right? So this trend is going to be more stable, but these first two moves, if you go back and look at when we come out of recessions, when we come out of bear markets, those first two tend to be the first like pop, like, let's go. So be ready, right? I mean, I don't want to overcommit. I want to be convinced that that's what's happening, but then it moves into that stable walk upstairs trend. It's a great market to trade. You know, calendar spreads are back on the table. We should have the ability to get a lot more capital out there, get some more chips on the table. But when this thing does come to an end, that's what my expectations are going to be. Okay, give me 1 second. I'm going to look at questions and then we'll move on to the watch list and just kind of see how things. Isn't retail trading about 50%? Sorry, Carmen. I'm probably way past when you said correlation. I'm not sure what I was saying correlated to. So if you can give me some clarity on what I was, how do institutions hedge? What do? They buy puts. If you were to read a prospectus of a mutual fund, they're gonna talk about what they can do with options, and it's very limited. They can't speculate with options. They don't sell options for premium or income. They can buy puts on whatever index they are correlated to, right? So if it's a technology fund, they're going to be attached to the NASDAQ. If it's a small cap fund, they're going to be attached to the Russell. If it's a large cap fund, it'll be attached to the Dow. But that's their benchmark, right? On the seasonal chart, it's what the current price action is relative to the 25-year composite. So you have two charts on there. One of them is what we're actually seeing, and one of them is what does a 25-year composite look like? Where it literally is taking the average of every day and then turning it into a chart and saying this is what an average year would look like over a 25-year period. And then it says how well correlated is the current price action to what the 25-year composite is. And right now it's not very much. So if you listen to Vlad, he'll say it's not really there. I still like to look at it because I want to have a sense of at what point do we start to move back into that and have that type of an expectation. Do I know what percentage of institutions move VIX compared to percentage of individual investors? Nah, there's really nothing about it. I can tell you that, you know, when retail traders buy puts, we don't buy very many compared to when a $20-30 billion hedge fund or mutual fund buys puts. They buy a lot. They've got a lot to protect. And that's why you see the VIX spike when institutions are participating. I would actually put retail trading at more like 20% of the market, with institutions at 80. I could be off because I've been using that number for a long time, and I admittedly haven't like done research to see if there's been a shift in that composite breakdown. But I've always worked off of the assumption that institutions are more like 80%. Oh, there we go. Bob just did some research. He said he was way off. Retail is only 10. Yeah, so I thought 80 to 85. But it's actually only 10%. So there you go. That's why, paying attention to I appreciate that, Bob. Thank you for that. That's why the institutional perspective, right, is so important. That's why I'm so in tune, or at least I try to be in tune with institutional sentiment, because they're a huge chunk, and right now they've got lots of cash. Everybody's employed, contributing to retirement accounts, to 401ks, IRAs, pensions, 403bs for government employees and teachers. I mean, it's all coming in, right? So awesome. Okay, let's hit the watch list. Okay. I'm going to lower this chart here. Yeah, so I feel like, I'm seeing things that indicate some recovery here. Alcoa still down, which is good. Remember that Alcoa is here not because we're necessarily looking to trade it because it's a nice commodity representation. This is aluminum, well off of its highs, very, very much, right? Apple looks good. It's made a higher low, higher high. I traded this one. We talked about it. This one was a little harder. I missed that. So we'll see if we get another pullback before earnings, but I definitely like the way Apple is shaping up. Chip stocks are absolutely pricing in a positive vote from Congress. So we'll see what happens if they don't get it. But remember what we said about chip stocks. We said that there seems to be some prospects if we get a higher low. So I wouldn't be surprised if some of you took a trade on some of these chip stocks. So there you go. So there you go. I think we're going to see more of that as we go through. Archer Daniels is starting to stabilize after its drop, but I would like to see less momentum in the consumer staples and more momentum into financials, technology, and consumer discretionary. There's AMD. So am I willing to trade chip stocks on the next pullback? Absolutely. This is something that we've been talking about, that we've been waiting for. That we'd like to see Apple and Microsoft and chips. And if we see those things aligning and looking better, then we can have some expectations that technology is participating. I've seen technology move the market by itself. I was always suspect of it because it's a narrow market. We like broad markets where other sectors are participating, but without a doubt, we're seeing that surge from technology that we've been waiting for, that gives us some signs that things are turning. Yeah. Alcoa's earnings are today. There you go. We'll see Netflix. Let me look at Netflix and JP Morgan for Desi. Yeah. I mean, you know what? You can see that it's just been grinding it out kind of at the bottom. Um, I need to see a higher low, and then maybe I'd take a stab at it. JP Morgan, the financials just haven't done enough yet. So we're still waiting for that, and they don't have to. We've seen plenty of markets move without financials participating. It may be technology, communication services, and industrials, or it may be technology, communications, and discretionary, or just technology and discretionary, or just technology and industrials. We don't need financials. We would prefer it. Like I said, technology can do it by itself. That's the only sector that can. But financials are not really there yet, in my opinion. Here's AMD. Here's Amazon. We talked about this trade on Amazon as a higher low. It got it, and it's working well. So it didn't happen to give the signal when we were talking, but we talked about that signal. I hope you guys were watching it and were able to take advantage of that one, because that was a good one and is still going. So there you go. AXP. So there is one for financials that I like. I've liked Visa. I actually have always liked AXP a little better than Visa, so I was hoping for this. On a small pullback, I will absolutely be looking to trade AXP, and that gives some hope. Chinese stock still kind of in the tank, nothing really there yet. Bank of America, very nice. Bank of America kind of had a breakout. Okay, so maybe I was wrong. Maybe financials are starting to show a little more signs of life. I like Bank of America on a pullback. I like American Express on a pullback. Dutch Brothers Coffee, it's grinding, but it's working, right? It's grinding, but it's working. So I still like that. Caterpillar, we don't have it yet, but maybe industrials will start to go. Oil, nothing there for us yet. Costco, beautiful. Oops, not yet. So Costco is one that we've been talking about and trading. At this point, it's hitting some resistance. I need to see a little bit of a pullback, but once again, if I get a little bit of a pullback, I'm definitely going to trade Costco. So you can see our list is shaping up pretty well so far, right? Apple, AMD, AXP, Dutch BAC, Costco, DBC, no. John Deere looks better than Caterpillar. We go back and forth. I have for years. I go back. I'll trade either one. I go back and forth. But I definitely think that the John Deere looks better. And now that it has broken, so this is the pattern I'm looking for those of you who maybe have never seen this pattern that I look at. I'm finding this line of consolidation. I'm waiting for the break. Then I'm waiting for the retest, higher low, bam. That is open for business at that point. That's what I'm looking for. So John Deere is on the list. How long do I hold stocks? Yeah, so I do have a portfolio of things that I would consider longer term, and that I will sell covered calls on at times. But really, what I discuss here is only trading, and I do mostly trading. I'm a speculator, so right now my holding periods have been 2 to 5 days. When the market improves, I would expect it to go to 5 to 9 days. If I do time strategies, like when I do butterflies, they'll last 2 or 3 weeks. If I do calendar spreads, they'll be 7 to 10 days, maybe 2 weeks. So it just kind of depends on the strategy, and it depends on market conditions. I'd rather hold a little bit longer because when we were really choppy and falling, I was day trading. That's in a high vol market. when things are real choppy, I do way less swing trading and more day trading. So I really am just kind of trying to do what the market tells me to do. It's a lot like my marriage. I just do as I'm told. If that helps. Okay. Oops, sorry. Let me get rid of that. That's not what I meant. Okay, DIA. Okay, we're looking all right on the Dow. FCX. I just don't see much. I'm not that interested in commodities of any kind right now. I'll need to be convinced before I am. FXI, Chinese stocks not doing great. Gold looks terrible. IWM looks okay. Small caps are there. They're participating. Jets has broken up. I would be willing to, if it pulls back and holds 17 as support, I'll definitely take a piece of that. Facebook, I don't think we'll have time before they get to earnings, but I think Facebook looks okay. It's trying to work its way off the bottom. Marvell, higher high. There's another chip stock ready to be traded on the pullback. Microsoft, what's the deal, Microsoft? We need you to participate. Get it together, man. But it's not. It's a little sideways. I like Apple, but not Microsoft. I'd really like to see Microsoft start participating in what we're looking for here. Neo, not much there. Just sort of meandering down. It's not selling off, but it's meandering down. NVIDIA, same thing as the rest of the chip stocks. They're all very similar. They've all given us that bullish pop. Now we're just waiting to see if it gives us a little more on a pullback. QQQ, very similar. Starbucks, yeah, we talked about Starbucks. We said we like Starbucks better than Dutch Brothers. I'm at this point taking some profits, tightening stops, and possibly looking to take the other half. And it's on the watch list for a pullback. When this has a little bit of a retracement, I would trade it again at this point. Who else traded Starbucks? Let me know. I know we've been talking about Starbucks. My discussion on holding periods is one of the most. Bill, well, thank you. I'm glad I'm glad that we talked about it. Thank you, Carmen, for asking that question. That benefited others as well. Awesome. Love it. I love it. Silver looks not great. Semiconductors looks like it's improving, as we've said. SPY holding on, but I'd like to see a little more. Tesla, nothing there for us. It's just grinding sideways. What's the deal? All of a sudden, natural gas is showing some. I've been wondering if maybe like natural gas would move differently than oil. If natural gas pulls back and makes a higher low, I might bring that in as a bullish trade to bring some balance just in case to the portfolio. UNH, somebody asked about that. Well, that's a tough one, man. I mean, it's up, then down, then up, then down. I'd like to see this work its way into a consolidation, maybe, and just kind of ease and then give me a legitimate like support level through here. As of right now, I'm watching, but not necessarily interested in taking any trades on that. Visa is one that we've liked. There's not really time with earnings coming up for there to be a pullback and then a trade, but we'll see what happens. The VIX is down, but we're still just kind of sitting on that same level. Staples are just grinding sideways. Utilities is another one that if it starts to turn from this support, I might pick up a piece of it. That was such a weird V bottom, right? Such a weird V bottom on utilities. If things get defensive, there's a good chance this pops again. So I'm definitely going to be watching that. And there is the watch list. So we have a pretty good sense. We have a pretty good sense. Where do we see the momentum? I would say that right now for me, technology and financials has it. Financials is in the midst of some earnings, so be careful there. But that's where the signs of hope are coming from. little bit maybe out of discretionary with John Deere, a little bit out of consumer discretionary. In fact, you know what? Maybe on Friday, if we have some time, we'll run some sector searches on the consumer discretionary sector and on the industrial sector, and we'll see if that produces some additional components that we can add to our watch list. That's your assignment. I want you to find me a couple of great looking consumer discretionaries and a couple of great looking industrial stocks. Bring them with you on Friday. That's when I will be back. Friday's our off day. So after Friday, right after we meet, I'm leaving and going straight to SeaWorld. Never been to SeaWorld, you guys. I'm excited. Going to SeaWorld. I'm not going to ride the roller coasters. My stomach can't handle it. I'll ride the log ride and I'll ride the river rafting ride, but I can't do those roller coasters. But I will be getting the all-day dining pass, so I'm going to try all their different foods. Yes. So, all right. Well, listen, it's really good to see you guys. I feel like we're all on the same page. Is UUP the best way to trade the dollar? Yes, Ted, I think so. I absolutely think so. I can handle trades, but not roller coaster. My stomach is only good for speculation, not motion. Thank you guys very much. I appreciate it. I will see you in 2 days. Let's have coffee together on Friday morning. Let's talk about things, and let's be ready with some trade ideas. It's good to see you all. I hope you enjoy the rest of your day. And as always, happy trading.